Stay one step ahead with Dubai Eye.
We're looking at the caps on how much banks can charge you if you want to move lender for your mortgage. Redemption charges. The permitted cap on those charges was actually raised by the central bank at the start of the summer as part of a range of fee reforms. We're going to have a look at what's actually happening in practice on the ground and what you're likely to see if you do want to change mortgage lender. Do text in your experience. We would absolutely love to hear it, or your fears or thoughts why you may or may not be interested in moving lender. We are super pleased to have in the studio this morning Declan King, who is the Managing Director and Group Head at the consultancy ValuStrat. They do a lot of research as well as valuation and offering strategic advice in the real estate sector. Declan, thanks for joining us this morning.
You're welcome, Brandy.
Let's look first at the change in these charges that we saw back in June, because we saw a number of changes, didn't we? A lot of fees remained static, but a few were raised, and this was one of the ones that was raised.
It was indeed. I believe 43 sets of fees were visited by the central bank, and I think many of them remained, as you say, static, and 19 were raised, including this one. At its simplest, the previous cap was 1%. So if you were paying off your mortgage early, your bank was entitled to charge you a penalty up to 1%. And that was increased up to 3%.
So we've had a couple of months now for this to bed in. Talk to me about the reasons that may have been raised. Do we have a culture of lender hopping, for example, here in the UAE?
I'm not a mortgage broker. I don't work in the banking sector, but as a valuation company who do multiple valuations every day for banking clients, we would have seen over the last few years that a lot of those valuations, there's no transaction involved. So it's Declan King, it's Brandy Scott who is remortgaging, but they're not buying or selling. So they're just changing mortgage lenders. So I think the answer is yes, a lot of people have been changing their mortgage to get a better deal.
To be fair, though, I mean, to play complete devil's advocate, isn't that fair enough? If someone is offering a better deal out there, you move. That is a free market.
It is from a consumer point of view. But from, I think, looking at things from the banker's side of the table, I think it's understandable, particularly if they've offered you a very attractive, maybe 1 year, 2 year, 5 year fixed rate interest rate. They want to keep you for the longer term when maybe they can charge you higher rates and maybe make a higher profit margin.
But they could also do what all their competitors are doing and make it more attractive, couldn't they?
They can, and there has been a little bit of a merry-go-round. So they lose 2 people and they get 2 new people. So the banks are doing it to the other. They're losing customers and gaining new customers. So I think from a banking point of view, it's probably more attractive if things settle down a little bit. And this may encourage a little bit of a settlement with people changing banks less often and changing their home loans less frequently.
Stay one step ahead with Dubai Eye.